I'm good at math. I certainly leveraged that capability, right, throughout my whole career. I wasn't a good engineer. Didn't know how things worked, but I was sure good at numbers. And it's like, okay, well, I might as well apply them to dollars and cents and not electrons and volts. So worked out a little better for me.
From Wealth Creators USA, this is From Worry to Wealth, the podcast that shatters the myths and mystique surrounding wealth creation. As students, our schools and universities often neglect the crucial education on the core financial principles. I'm Ben Lyons. I'm a business owner, investor, entrepreneur, and author, and I'm joined by my business partner, Alex Fink. And together, we're here to inspire your journey towards improving your financial self. In a world buzzing with advice on the behaviors and mindset to become wealthy, we'll share proven processes tried and tested by our network of successful collaborators. So get ready to move past worry and move towards wealth and your improved financial self. Hi, welcome to this edition of From Worry to Wealth, the podcast that talks to you about the process of wealth creation. And I'm very excited to be with my esteemed partner, Alex Fink, business partner extraordinaire at LYNK Capital, right? And
absolutely.
Among other things. And,
happy to be here.
And we tried to color coordinate the black shirts, but apparently his shirt's gray, mine's black.
Failed again. Yeah.
But anyway, we are really excited for this episode of From Worry to Wealth because we have a dear friend and one of our largest investors in the LYNK Capital Mortgage Fund, Steve Kester, with us.
Not by the pound, but by...
Not by the pound.
Yeah,
that's
not by
right.
the age, just to clarify.
By the age.
When they talk about me being the largest investor, it's by the pound. And so I just want to make sure that Steve is...
Well, the guy is a triathlete. Right?
That's true.
Is that right? Ironman triathlete. So he can outrun us all.
Yes.
And outswim us all and outbike us all.
Yes, correct.
But he's actually older than all of us. But before we get going, just a reminder, this podcast really centers on the principles from worry to wealth, where we discuss the wealth creation formula really in every episode. So in this episode, we're going to hear all about Steve's background. I already know it, and so does Alex. It's pretty impressive, and we're really excited to be bringing that to you. And at the end, we're going to unravel really his success and how that relates to the wealth creation formula. So with that, Steve, welcome. Thanks for being with us. Let's start by, I know your background, really impressive. Why don't you tell our listeners and viewers about you? Start maybe when you're a little boy. We want to start.
Yeah, just very young, maybe crawling. Is that?
Yeah. You can start in fourth grade or third grade or as far as you want back, Steve. Anyway, go for it.
Anything that shaped your life.
That's actually a really, really good timing because a friend of mine hired a biographer for me. And so I've been spending the last 2 months writing my biography, and a ghostwriter has been helping me. So I just, what a healthy process that has been, looking back at your life and having a third party objective person kind of parachute in and ask you the hard questions at the inflection points in your life. And so I want to give a plug for that process. If anybody wants to do some self-reflection, that's a really healthy, albeit sometimes difficult process.
How did you find the biographer, Steve?
Somebody found him for me.
Yeah.
And it's a young man. He's in his probably late 20s, and just real disarming personality, as you might expect, and get you to kind of tell all sides of your story. So that was a very healthy process. And I just saw the first draft yesterday, and I can count on one hand the number of times I cried in my life, and that was one of them. Just kind of being transparent here. I grew up very much in a blue collar background. I was born on the Jersey Shore in southern New Jersey, not the glamorous part of New Jersey, but the unglamorous rural part of southern Jersey. And my family moved to suburban Philadelphia. And my parents divorced when I was young, and we lived with my dad, me and my 3 brothers. So it was a kind of a cross between Planet of the Apes, Animal Kingdom, and Lord of the Flies, our house, because it was 4 boys and my dad. So it was pretty unruly. and we were probably lower middle income family. Um, and my dad just made it clear that anything we wanted outside of the bare necessities was going to come through our hard work. And I delivered papers as a kid. I always worked jobs all through high school, um, and it was really, um, one thing I say about my kids is that the greatest disadvantage they have is they have no disadvantages, right? They trade a perfectly
For sure.
well working iPhone for an upgraded iPhone, right? I could just imagine asking my father for something like that back then.
I was just going to ask you, Steve, was your dad pretty involved in your childhood at that point, or was he? You said it sounds like he might have been working a lot, right?
Yeah, we could go down a long path on this, but the short answer is no. My dad worked a lot of hours, and he was always a good provider. Um, and I didn't know any better, but basically, I was the youngest of four boys, and we basically raised ourselves, in
Right.
the house. And I think you could look at that and call it a broken home. I look at that and think about it as a childhood that forced a lot of independence on me at an early age that quite frankly now paid dividends. And it
So
wasn't.
Steve, who were you influenced by growing
Yeah,
up?
that's a good question. So, again, I was the youngest of four boys, and the first inflection point in my life happened in eighth grade, and in our local public school system, something really awful happened that made the national news, and the principal and three teachers were involved in some love triangle that went south, and the woman got murdered, and her two kids were never found,
Whoa.
and it was just an awful situation. And the first person that influenced my life was a swim coach that went to my father and said, "Get this kid out of the public school system because there's no good that's going to come out from this." And and uh, and put him into private school, and that must have seemed like putting me on the moon to my father, who grew
For
up very
sure.
blue collar, right? Private school, how does
Yeah.
how does that work? Didn't know they existed. And so I went to went to high school at a school called Germantown Academy, which was in suburban Philadelphia. Very well respected private school. George Washington's kids actually went there hundreds of years ago, and
Was
and
that
that
just
made
you,
it.
Steve, or did all your brothers move over?
No,
Were they too
it
old?
was just me. My two oldest brothers were getting ready to go off to college, and my brother right above me ran away to California in ninth grade, and my dad said, "Good luck with that,"
Oh wow.
and didn't see him again for 10 years. So I was, my older brothers were shipping off to college, and so I did 4 years at Germantown. I was the poorest kid in a very well-to-do private school. So the first person that bent the arc in my life was a swim coach who, you know, told me to get into better surroundings. And I went to Germantown Academy, and Germantown Academy was a very good school, and they had the nation's number one high school swimming program. They produced a number of countless Division I athletes, Olympians, and there was a swim coach there named Dick Schulberg, who was coached a number of Olympic teams, and I was on the swim team, and I was a middle of the packer on the swim team. I was in by no means an elite swimmer, but I really saw from Dick his um, his drive, his hard work, him pouring into others, and getting the most out of them, probably in a way that would not be tolerated in today's um, uh, you know, athletic programs. And I don't say that in a mean way. He was just very disciplined, very focused, and got great results. So that wasn't lost on me, even though I wasn't one of the stars. I looked around and I thought, wow, that's really good. And then the last person in high school, I went into high school with a pretty low self-esteem, right? My parents were divorced. I was the poorest kid in the school. Everybody else drove up in fancy cars. My first car was a mail truck I bought at a postal auction for $200.
Awesome.
That's
fantastic.
That was my
Everybody wanted
car.
one of those things. That's cool. Those things were cool.
I got a picture of that one. So I had a pretty low self-esteem, and a physics teacher, I guess, saw my entrance scores and encouraged me to take the state mathematics competition that they have every year. And I won it. I'm like, whoa, for Pennsylvania. And so he kind of pushed me academically. And those three people, so I'm at this private school, and my clothes aren't as nice, my car's not as nice, my family structure is not nearly as nice as everybody else. And I look around and I'm thinking, like, how did these people achieve all this? And I'm just as capable, if not more, than these are, and yet their circumstances are very different. And I think it's just human nature to want to improve your station in life, and I didn't see any barriers for me to do that. So that whole experience, I'd say, put me on a path to what I did was able to achieve later in life. And I really thank those teachers, those coaches, those people in my life who saw that in me and did that for me. And
So Steve, your background, when we've talked to a number of our employees that are in similar situations, right, where they happen to be from an area not as wealthy, they're surrounded by people that have more than them. There's this. So we've often seen, Ben, you can opine on this, but we've often seen almost the opposite thought process, right? It's, as they look around, it's like, how could I ever amount to any of these people?
Right.
But it seems almost like you had the opposite thought process, right? It's like, oh, I can, what do these people have? I could do more, I could do just as much as them. Where do you think that came from? Was that from the mentorship, or is that just innate to your personality?
I tell my kids to form a friend group and a peer group that's the most capable, talented, well-rounded, ethical people because they're not going to be jealous of your success, and you're going to look around, and they're going to they hold you accountable, and they challenge you, and they lift you up, and you want to have a friend group like that. And I have 3 kids, and each one of them, I'm very proud of the friends they choose to hang around, and that's true. That's true. That's been true my whole life. I've done very well in business, and I'm in a mentorship group of people that have done really well. And it's interesting because I look around in the room, and I think, oh man, I'm only 100 millionaire. I want to be a billionaire. So no matter what your station in life, I think most people, they just kind of look around, and it's just human nature. More is better than less, and they strive for more. It's certainly true in my case. And I think, if you're putting yourself in a healthy environment, you're just going to pull yourself up. So I'd encourage anybody to surround themselves with people who are going to build them up, not tear them down. And, and all to all the young people, to all the young people, like my kids' friends and other young people, I just tell them they're capable of so much more than they think they are. And because I look at my life and the environment I grew up in, and what I was able to achieve, and people, I just firmly believe that people are more capable of doing things than they think they are.
Yeah.
That's been my experience.
Steve, I really appreciate your story about your influencers in high school. But take us from high school. What happened? I assume you got good grades in that school.
Yeah, I did. I did. I made pretty good grades. I did really well in standardized testing, and I did pretty good in school. That's probably related to ADD. I can pay attention for a short amount of time to take a standardized test, but a whole coursework, maybe not as. Yeah, back then they just called it distracted or something. Before Ritalin and everything else that they came out with. So I was a pretty good student. I came out and I got into MIT, and my dad said, "Yeah, that's great, but we can't afford that. And whatever money I had, I already spent on your high school. So go find a state school." And I somehow I stumbled upon Georgia Tech. I went in and I remember, and my dad didn't go to college, and I wasn't really close with my brother, so I didn't have a lot of. I didn't know what kind of a major I wanted to pick, and I literally wrote a letter to the dean of Georgia Tech, Dr. Pettit, and I said, "Hey, what's the hardest major at Tech?" and I sent it off, and a couple of weeks later, I got a letter back with 2 words. He wrote electrical engineering.
That's a
And
tough. That is a very tough
that's
major.
literally how I became an electrical engineering student at Georgia Tech. And yeah, so that was okay. You know, but one of the things I've been really good at my whole life is just figuring out what I'm good at and what I'm not good at. And while I was kind of textbook okay, good at engineering, the best engineers just knew how stuff worked, and they could put it together and take it apart, and 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 they knew how stuff worked physically, electronically, all that. And that wasn't me. And so then, um, I but I was good with numbers, and and my experience starting in private school, I wanted to become wealthy, and I was good at numbers, so I went and got an MBA at Wharton. Um, and
So did you switch degrees or did you graduate with the electrical engineering?
No, I graduated with an electrical engineering
Oh
degree from
wow, that's
undergraduate.
impressive. Yeah,
Yeah, and then
electrical engineer going to Wharton Business School afterwards.
yeah,
That's not
right, and I
something you
majored
see.
in
Yeah,
finance. Now that was easy because
I bet.
finance is, as you guys know,
Right.
is all about numbers and math, and engineering curriculum, particularly at Georgia Tech, prepared me well to do any number crunching in finance at Wharton.
For
So
sure.
yeah, so academically, Wharton was easy for me. Um, uh, what I wish I did better was networking, because engineers tend to be a little insular, and a lot of the people at Wharton had deep ties to Wall Street. Their parents and whatnot had deep ties to Wall Street, and I didn't have any of that.
Well,
And I
Steve, let me interrupt for our
yeah.
listeners and viewers. How did you pay for Georgia Tech and Wharton? How did were you able to cover that?
So Georgia Tech's a state school, and Ben, if I remember correctly, my first semester of tuition was like, in-state tuition was $200 and out-of-state tuition was $800.
Oh, okay.
And I got summer internships. I worked at General Electric, as during the summer in an engineering capacity, and I took out some student loans, um, I always worked. Not sure if I could say this on this podcast. So Matt, you can, you can edit it out if it's not good, but I delivered pizza, and always having a knack for following the money. I discovered that the best place to deliver pizza and Chinese food was at the strip clubs.
Mm.
That's where you got the best
Man,
tippers.
write that down. Man. I didn't. Yeah, I was not aware of that. We could. Yeah, that's a business opportunity. It sounds like, Steve. Yeah.
Yeah. So, internship, student loans.
I'm surprised that you got into MIT, but didn't get a full ride scholarship to Georgia Tech. That's surprising,
Alex, they're smart. Well, and maybe,
especially with your background.
maybe there was something available, but I didn't come from a real sophisticated household.
Right.
If and I don't fault my dad. He was a fine provider, but if they kids today network like crazy, and so and who knows how my life would have been influenced that way. You never know. But tech was fine. Tech, the guys were scrappy. Very smart people. Cheap as the day is long. They could make a buffalo. The buffalo on a nickel scream. What we used to say, the engineers.
Right.
Yeah, and I worked in engineering when I first got out of undergrad, and it just wasn't for me. I saw a lot of, I think I was the youngest guy by like 20 years in my office, and bunch of old conservative engineers working there. It just wasn't for me. So that's that's when I decided to go to Wharton. And,
So Steve, how did you pay for Wharton, and then segue into what you did after Wharton? Start segueing away from employment, education, and into employment. So, how'd you pay for Wharton, and then tell us about your.
That's a good question, Ben,
path.
because I can remember my dad. When I told him I was leaving my job as an engineer, and I was going to Wharton, and he's like, "You're doing what?" He goes, "How much does Wharton cost?" And I said, "Well, all in, I think it's about $30,000 a year." He goes, "Jesus Christ!" I won't say it on the podcast, but and he goes, "How much are you making as an engineer?" And I said, $30,000. He goes, "You need to make $60,000 to pay $30,000 tuition after taxes." He said, "This is the stupidest financial decision. You are leaving," as if it wasn't obvious to me. He goes, "You are leaving income and absorbing expenses." He goes, "You're going backwards twice as fast as you should be." He goes, "This is the stupidest decision you're ever going to do, and you're going to regret it." And to my dad, I don't want to throw him under the bus. He was just hardworking, blue collar kind of guy. So this just didn't make sense to him at all.
Not surprising at all, right?
Yeah, right. And didn't you have enough fancy education of that? What was the name of that private school you went to, and all this sort of stuff.
That's funny.
So,
all right. So you graduate from Wharton. You have
and I went into consulting, which makes sense. Consulting is very process and numbers driven. So I should have went to Wall Street and worked for a hedge fund. That's what I often think. I don't know if you guys think, what is the best job that you were built for? The intersection of interest and talent. And, I wish I was better connected into Wall Street, because I think I would have fared better. But I went in, consulting was a very honorable profession. And I made partner at Accenture, which is a very prestigious consulting firm. A lot of smart people there. I spent 10 years in consulting, and did very well with that. Made a very large income at Accenture as a consultant. In today's dollars, well over $1 million a year. And, we had 2 kids at the time. Um, I met my wife in grad school, and we were, you know, yeah, in today's dollars, making over $1 million. We had a nice house. Um, two kids. My wife worked as it was a pediatric specialist. So she's very smart and very storied in her own right. But something gnawed at me in consulting. I kind of got too good at it, and I felt like I wasn't growing, and I felt like I was kind of an inch deep in a lot of subjects and a mile wide. If that makes any sense. Like I
Uh,
knew all the buzzwords,
I was
and
going to ask you what type of consult. Where were you focused? What area of?
yeah, I did operations and M&A and
Okay,
um,
so it's a pretty
consulting.
wide
So
spectrum. Yeah.
bringing companies together, cost cutting, um, you know, customer service strategies. I worked with big companies, John Deere, Harley Davidson, Kroger Company, big storied companies. Um, and and the whole internet thing started happening. This is where things get interesting. The whole internet um, revolution started happening, and I knew all the buzzwords, and I was consulting clients on it, but I really didn't know what I was talking about. Um, and I and we were prodigious savers. We saved. I always remember saving like 25% of my salary, and we lived well within our means and all of that. Um, and this internet revolution was happening, and I thought I'm missing out on this. And if I'm ever going to take a chance, now was it. And I was in my early to mid 30s, and um, I
Your
decided
25% savings. Not to interrupt you there, Steve, but your 25% savings. What were you doing with that?
I put it into whatever the 401k plan that the
Got it.
company
Okay.
offered, Fidelity, all that sort of stuff. And I'll circle back to
Yeah.
that. So I was restless in my career, and this internet thing was happening. And so I joined a small publicly traded company called Aspect Development, which, okay, you ready for this? Made business to business e-commerce software. So the whole idea was companies are, have to trade, like Ford Motor Company buys from all these suppliers, and um, they, none of this is computerized. None of the communications are computerized, or, they can't do comparative shopping, and their catalogs aren't electrified, or, they're of all their parts. And, so Aspect Development um, was a publicly traded company on the NASDAQ, and I left consulting, and I walked away from 70% of my income. And I took a job with a software company where I made a little bit of income, and I got a lot of these things, which I'd never known what they were. They're called stock options, non-qualified stock options. And so I got a boatload of those, whatever they were, um, and a little bit of salary. And now I'm part of the internet revolution, and we're gonna develop these electronic marketplaces where businesses can seamlessly do e-commerce with trading partners around the globe, 24 hours a day. Blah 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 blah. So it was it was a fascinating time to be in that space, because the hyperbole was tremendous, and um, and the valuations were incredible. When I joined Aspect Development, the shares of the company were trading for like $5 a share, and the company was just a hot mess. And the shares went from $5 to $10 to $20 to $50 to $100. And 2 years after I joined, we got bought for $212 a share.
Wow.
And this company never made a profit.
Wow.
they did not have one referenceable customer.
Wow.
So,
Total
and
speculation. Total speculative.
yeah, total speculative.
Yeah.
And I was on the inside. And if you've ever watched the movie The Big Short, they touch on phenomena like this. And there's a great saying in The Big Short, where the guy who's on The Office, what's his name? I forget his name. He says, "This is cat shit wrapped in dog shit."
Yeah, right.
And that's exactly what our products and services were. Cat shit. And I was on the inside, and I left a very good career for this. And now I know what these stock options are for, right? Because now I got stock options that are issued at $5 that are now worth $212 a share for this company that, to me was just, a POS. And
What's interesting is that your experience up to this point almost uniquely qualified you to make that determination, right? Because you were essentially consulting on operations for companies. So you took your skill, used it to go into a company, get some stock options, were able to recognize that the company had very limited value because your skill that you had built over a 10-year period gave you so much exposure to operations and marketing and every other aspect of the company that you were sort of uniquely qualified to determine if it was cat shit.
Yeah, right.
Yeah.
And, things like, do we have any satisfied customers? Software we sell that we say works actually work. And so, like at Wharton, I was a finance major, so they talked about, and you guys deal with this every day with ratios and loan to value ratios and price to earning ratios and all this sort of stuff. And when we sold the company for, okay, you ready? We sold it for 92 times forward revenues. Now parse that, Alex. You're a smart guy.
Yeah, 92 times BS speculative.
Forward.
Yeah.
Forward.
Yeah, you forgot the word profit in that whole discussion, didn't you?
Right. And I just thought, maybe I'm the dumbest guy in the room here, right? But this doesn't make any sense.
No.
So we sold the company, and then I waited every day for 3 months while what's called the quiet period ends. And you guys probably know what that is. That's when the officers of a company are restricted from selling a stock. And so I'm sitting there just every day like, oh, please, world, don't let the world discover what I know.
Yeah.
for 90 straight days. And that period ended, and I locked myself in a room, and I literally sold every stock option I had.
Brilliant.
I turned my cell phone off, which was a big giant flip phone at the time. I shut my cell phone off, and so called Hamburg and Quist, and spent the whole day, because the stock wasn't that liquid, sold every single stock option I had, and suddenly I had $20 million in the bank, which to me felt like more than the gold currency of the entire world. And the management of the company was so mad I sold every share. I got fired shortly thereafter, which really didn't matter to me, because then, and I pointed this out to them, I said, now that I'm no longer an employee, I can sell the stock short, right?
Wow.
As an officer, you're not allowed to sell the stock short. So I took a portion of that $20 million and I started selling the stock short. And you guys know how short selling works, right?
Of course. Wow. I didn't realize that. That's great.
The
Brilliant.
stock went from $200, and then a year later it's at 17 cents.
Not a bad short position, I would say.
Not a bad short position to have.
How much did you make on the short?
Yeah, a fair amount. A fair amount. So, I don't. The lesson there is, eventually the truth comes out, right? I mean, that's probably true. Like, you see something, and eventually the truth will come out.
So as you were doing this, because I just want to make sure I point out for everybody listening and watching, right? this sounds easy, but at the time, it was pure speculation on your part. I mean, obviously you knew what you knew, but not only did you take a bet.
I walked away from 70% of my income
Right.
with 2 kids, and my wife was pregnant.
Right. Right.
How do you think that went over?
But you also walked, so at every turn you walked away from income that you had as an engineer, and you took this, you walked away from your income as an engineer. You got a Wharton degree, right? You used that to do your consulting gig, made a ton of money. Very few people would walk away from that. Very few people would have walked away and done the education.
Yeah.
You walked away from that consulting gig that was highly paid, did this speculative business, realized the business had some challenges, made a huge bet in terms of knowing that you were going to displease, is probably the most mild word I could use for it. Your management would be displeased, and you went on a limb on your own, made that bet. Not only did you make that bet, you doubled down on that bet, even as they were telling you were crazy, even as you got fired, and you shorted that same stock. That's several bets that went very, very well.
Right.
Wow.
And one of the things you guys talk about in Matt's outline was leverage, right? And an important part of being a good investor is identifying asymmetric risks, right?
Yep.
That is risks where they're just going to provide a larger return. They have a much higher chance of generating a larger return. And for me, I knew that space very well, right? I was living it. and so to me, shorting that stock provided an asymmetric opportunity because I was so experienced with it.
But you also didn't know the timing, so it could have very well gone the other way for a period of time, right?
Oh, correct. Yeah. And it may very well have. I mean, I got out, Alex, in March of 2000, which go look at the NASDAQ. I mean, it was literally, you make a good point, because that 90-day quiet period where I was locked up, if that had been 180 days, it would have all went up in smoke.
Yeah, I think my point is, like, you referenced The Big Short, right? So when people hear that story, they're like, "Oh, this guy got lucky," right? But when he was shorting the market, he felt a tremendous amount of pain. He second guessed himself. Other people threatened lawsuits. So it sounds easy to do what you did. What I'm pointing out is that took some major guts to do that. At every turn, you took risks that a lot of people are not willing to take. Would you agree with that, Ben?
Yeah, and what I like to do in these podcasts is constantly reinforce the wealth creation formula. So, Steve, the notes that Matt Huffman sent you, who's our education director here at Wealth Creators, he sent you the outline of the wealth creation formula. And what I'd like to do is I was going to wait till the end to just reverse engineer this, but let's take the information to this point. And this is related to what we teach in our wealth creation course. You didn't grow up with a rich family. You grew up where, fortunately, a smart teacher recognized great promise and said, "Steve, you should be in a better environment." And great decision there, because you invested in that influence. That influence then pushed you. You were motivated internally, but you chose a vehicle of electrical engineering and then an electrical engineering job. And you decided, you know what, that vehicle wasn't right for you.
That's exactly right.
You chose yourself. You said, you know what, I'm on this vehicle of electrical engineering, but this is the wrong one. Let me go to Wharton, increase my value through financial knowledge. Let me get an MBA, which equipped you with even a better path to a better vehicle. So really what we're trying to illustrate here is that a lot of people who take our courses, maybe they're on the wrong vehicle, but you were smart enough to say, hey, I got to get on a different vehicle. And I don't want to take anything away from you, but you chose to get on a different vehicle. You gave up a very good vehicle, right? Electrical engineering, I don't think many people would say that was a bad vehicle.
Right.
You said, you know what, this is not a good fit. This is not congruent with who you are and what you want to do. Great decision. Turned out to be a fantastic decision.
And one of the lessons here, right, is the process by which Steve figured out that this wasn't really a good fit for him. Because a lot of people would sort of work through almost grind it out, and just say, okay, I know this is not really what I'm passionate about, or what I'm that good at, but I'm just going to stick here because it's safe, right? You recognize, right, I can take a massive step forward by getting out of this, getting an education in another field that I think I'm better suited for. And that's exactly, I think, where you're going with that.
And I took calculated risks, right? I mean, we had 2 kids and my wife was pregnant. And so, walking away from consulting would not have been possible had I not saved prodigiously for the 10 years I was in consulting.
For sure. That's a good point too. Yeah.
Yeah.
You had some disposable income, you had some savings. That savings allowed you to take those larger risks, for sure.
So yeah, I take big risks, but I would say I take big qualified or calculated risks.
Yeah.
And always be willing to change. And one of the things, I love about LYNK is it's so not me. And by that, my natural inclination is to take big risks, go all in
right
on this. And LYNK is it's not home runs, but it's just a tremendous series of doubles.
Right.
That, in an area you guys are very knowledgeable at. And so, after I'm not dumb enough not to realize that if you keep going all in, eventually you're going to lose. So
for sure,
I like to have these other investments.
But you had that along the way too, though, right? I mean, you had some savings that you took. You took these big risks, but you always had a nest egg. So you kind of balanced it out, it seems, your entire life.
Correct.
Yeah.
Correct.
Yeah. And what I'd like to do, just for those watching and listening, really, Steve, we talk about the wealth creation formula. What it starts by saying is that step one is really you've got to invest in the education, because it was the education that produced your economic income, and your output, right?
That's exactly what happened.
That income.
Right. That's a good point. At private school, yes. Engineering, yes. Wharton, yes. They were all inflection points in my life.
So we teach in the Wealth Creators courses that you have to invest in some specialized area, in some knowledge, so that your income, the income vehicle, can outrun your expenses. And there is certainly statistics that say a high school grad versus a college grad versus an advanced degree produce different incomes. But a lot of people say, well, no, duh, and of course, if I have a higher degree, I have more income. But really what we're talking about here is investing in the education, whether it's formal or informal. Now, you happen to have a very formal education, right?
Oh, yeah. Correct.
I would say that there are ways to get educated without it being formal, especially if you can't afford it.
Absolutely. And I take it, Alex and I were just talking about all the opportunities with AI earlier. That's something I study quite a bit now. So yeah, I agree. It doesn't all have to be formal education.
So I'm just going to round this out, and then we're going to continue on hearing your story, because for those watching, Steve has that may have been a double or a triple from everybody's perspective that's listening, but you'll hear a home run coming soon, even on top of that. But so you invested it in education that created the income. That income allowed you to save a percentage that gave you a nest egg, so that you could then keep investing in another career, which produced an asset. The asset was the liquidation of your stock.
Right.
Okay, so your net worth it started out by being created by your income and the savings and the 401k, but then it ultimately was created actually from the sale of the stock. Is that correct to this point?
Correct.
All right, so take us from here.
Yeah, so now I have this, I'm in my early to mid 30s, and I have this newfound wealth that I never thought was possible. And, I got in shape. I got reacquainted with my kids. I got reacquainted with my community. I invested all my money with a Jewish fella in Atlanta named Elliot Shapiro, who was wonderful. He was an older gentleman, and he managed all my money, and he was great. But he was towards the end of his career, and after a couple of years of working with Elliot, I was getting my life back in order after working around the clock for 15 years. Elliot sold his business to a guy named Angelo Lecca, and fast talking New Yorker, who looked the part, talked the part, all of that. And turns out Angelo was a Bernie Madoff knockoff. and I went from having a lot of money to having a negative balance sheet. And Angelo,
wow.
And one other accomplish, Bernie Madoff me, essentially, and a lot of other investors.
Is he in jail today?
He spent years in federal prison in Mobile, Alabama.
Wow,
I was the only
horrifying.
I was the only victim to go to the sentencing hearing, which was, wow, what an experience that was. During all of this, I also got cancer. So you want to talk about
a dark time in your life. Yeah.
Going from a dark time in my life.
Yeah.
That was the darkest of dark times in my life. And, things could have really went off the rails. I mean, they went off the rails. We had to sell our house at a fire sale price. We pulled our kids out of private school. I discovered, it's getting uncomfortable calls from real estate people about, are we going to make it? And these are the ramifications, calls you guys deal with a lot more than I do. So that was kind of another inflection point in my life. And I had started a medical business for addiction treatment centers. But it was very early. As you guys know, small companies don't throw off any cash. So all of my savings were wiped out, and I didn't have any income to speak of. And we had a company that was doing well, but needed cash to grow. And so those were pretty lean years in our family. But the company, just short story. I mean, we could go on for hours, but the company did well over a series of years. We over a 15-year period, we grew the company, the addiction treatment centers, to nearly 200 locations across the U.S. and sold it for $500 million. But that was.
Were you part of the management team, or were you just passive in the company?
Yeah. I was responsible for opening all the new centers. So,
oh wow.
Of which we opened close to 200. And if you think the Chamber of Commerce comes out for opening an addiction treatment center in a town, you would be mistaken.
Oh, for sure. Yeah.
The lawyers come out and they say, "Not in our backyard," NIMBY.
But now you can turn on Netflix or Hulu and see that whole story play out in a series.
Yeah.
Right. So your timing, somehow your timing is always excellent.
Yeah, that was that timing, if anybody makes standing up a company and growing it to that level sound easy, they're mistaken. That was
right.
We started that company. For me, it's just like the worst absolute worst period of my life. A cancer diagnosis, and getting ripped off to the tune of 8 figures.
Wow.
That was the absolute worst part of worst time of my life. And I credit my wife and my faith for getting me through that. But necessity is the mother of invention, right? So that worked out well. And I've done a couple other ventures like that have worked out well. And and poor Ben Lyons, when I did have a liquidity event, I was looking for another money manager, and I got on the phone with Ben. Ben, I don't know if you remember this call or not.
Yeah, I think I do, but go ahead.
You were probably a bit more skeptical this time, Steve, than maybe you were in the past.
I did an FBI search on you, Ben. Good news is you came out clean for
okay,
anybody
good.
listening.
I passed.
Yes.
That's good.
But yeah, that was I remember calling Ben, and my very first call, and we started out small. I don't know if you remember, Ben, but we started out small. One of the things as I've gotten older is, going all in, I tend to wade into things a little bit more prudently.
Smart.
Given your knowledge now, if you had run that investigation on that money manager, would that have saved you, or was he pretty clean at that time in your mind?
So that's a good point, Alex. He bought the company, right? So it's not as though I chose him.
Right.
Like,
Exactly.
I had a very well-trusted money manager I was working with.
Of course.
Elliot Shapiro, nice guy. And in his defense, he didn't know either. And
how devastating for him, though, to turn over that.
It was devastating.
Oh, wow.
Because there were people like me that lost literally our entire wealth.
Yeah.
So that was, I mean, I'm sure his lawyer said, don't you dare pick up the phone and call any of these people.
Oh, for sure. I was just wondering if you gleaned any experience that would allow you to or allow our viewers to, learn something such that they wouldn't get in that same situation. So I was just curious.
Yeah. Due diligence is important. So, one of the things I like about LYNK is that everything's up on the portal, and you can look at, down to the loan level documents. So there's a level of transparency there that is very refreshing. And they do their homework. So doing their homework and doing the due diligence, as you guys know, looking at any investment, I mean, you guys do due diligence on deals every single day, right? Mm-hmm. and I can only imagine how many times you guys say, if this seems too good to be true, it probably is.
Right. Yeah.
Right. Or, something, if I see a cockroach, there's usually 100 I can't see.
Right.
Right. So, yeah.
So Steve, your story, you had your exit, your big exit, your last exit, it was just a couple of years ago. And
correct.
So you're still doing your, is it triathlons or is it?
I do my physical health, a lot. Early in my career, it suffered, quite a bit. So I keep in shape, and my wife does too, and that's good. But I'm still very active with my investments, and it's good.
But your wife trains people in that space, doesn't she?
Yeah, she's a coach. She's good.
Yeah,
she's
so
the better.
He's got a little bit of an advantage being
as a dude. It's kind of tough. I mean, she's athletically a better athlete. So if we picked up tennis, she beat me. We picked up pickleball.
That's amazing.
I don't have any good advice.
Yeah, but you have a little bit of an in with the wife in that space, right? Like, so it probably helps you a little bit. Yeah.
Right. I'm afraid to pick up any different sports.
Yes, Steve. So first of all, thank you for sharing your story. But I just, before we close out this podcast for our viewers and listeners, I always like to relate it. I'd like to have a discussion with Alex and you about the attributes of the wealth creation formula. So the way we want to look at your story let's look at it from, so there's four variables. There's variable A, which is the ability to scale your income. There's variable B, which is the acquisition, the accumulation of assets. Mm-hmm. And then variable C is the utilization of leverage. And that's monetary leverage, so leveraging money and leveraging people, or leveraging knowledge,
Time.
or time, or also leveraging technology. And then variable D independently is the use of time. And we talk about the short-term use of time, which is really making ourselves more valuable, and the long-term use of time within investments and strategies. So in looking at your situation, let's unravel, if we could, the wealth creation formula and how you applied it. Because the argument that we've made in our podcast and in the book and courses is that every single wealthy individual that is self-made, as you are, has utilized this wealth creation formula in some way. And it's explaining to our viewers and listeners so that they can really see the patterns of how it got used. And I'll let either you comment or Alex about how you use this formula, or I can. But Alex, you since you understand the wealth formula, you want to kind of, how did Steve really use this formula?
Well, he's kind of textbook for the formula, right?
In some ways, yes.
He really is, and I feel like because the formula is so easy to understand and simple to follow, everybody fits this pattern. But I think he does better than a lot of people.
So he invested in his education.
Correct.
Okay. Right? Mm-hmm. Was that step one? He made an investment in his time to get educated.
Correct. Yep.
That put him on a path of a high income. Is that correct?
Well, that put him on a path, first, the way I see it, it put him on a path to have a skill that allowed him to get an even higher education that put him on a path to greater income is the way I would
so
see it.
He kept investing in himself.
Correct.
To increase his value.
Yes.
And then he went out into the marketplace and was highly paid.
Highly paid, yes.
For those decisions, correct?
Yep. Took that disposable income, created some savings that allowed him to take the risk in reducing his income and focusing on an asset that would appreciate, right?
Through stock options?
Through stock options, correct. Keep going.
Now, he would have had to have known how to do stock options, right? Mm-hmm. Not everybody inherently just understands. Of course, you were given stock in your company, so it was part of the compensation.
Stock options, of which I had very little appreciation for when I first started.
Right. Now you do. Okay.
Right. You tend to focus on the things, right? You learn the things that have the greatest return.
So his variable B was created through the sale of the options, right? That was your first liquidity event.
Asset appreciation, yeah.
Steve, did you buy real estate along the way? Did you invest in other things that are notable for our viewers?
Yeah, so I mean, I'm a pretty good student of the common investment principles, which are diversification and allocation, right? If you were to look at my total wealth, you'd see a very diversified, portfolio. LYNK is a component. So there's the traditional investments that I have, stocks, bonds, things like that.
Yeah, manage money.
Yeah, manage money, and you'd look at that and you'd see a very diversified portfolio of stocks and bonds, U.S. equities, international equities, all that sort of stuff. But then, in my experience, and from everything I've read, it makes sense. It's these alternative investments that allow you to separate from average returns and have superior returns. And that's, in general, private equity and private credit, of which, LYNK, as you guys know, plays a major part for me, the private credit side. So I do a lot of both private equity investment and a lot of private credit investment. And that, the stock market's been very good for the last, 10 years, but that has allowed me to have even better returns.
So let's look at variable C and D. So Alex, how did Steve use variable C of leverage? What did he leverage? Money, time? Okay, and then how did he use time? I'd like to, for our viewers, listeners, unravel that, just to really hone in on this formula, and that it is a formula for a reason. But let's cover those two variables, variable C and D. What do you think with Steve?
Yeah, so I think that as it relates to leverage and time, I think he leveraged his education and his skill set to generate pretty significant income over a reasonable period of time that allowed him to produce savings so that he could take a more risky approach, right? It's interesting with Steve in time because his timing is just so
Right,
good.
right.
So kind of a less conventional approach to timing is this. If you look at the timing that he's had, which is different than I know the leverage of time, but he was able, he had that disposable income, created the savings that allowed him the nest egg to make more significant investments in assets, and that's kind of storybook, right, for the formula. Leverage those assets then to make further investments that over time, unfortunately with his theft, didn't really pan out for him.
Right.
But leverage time in after that traumatic event and his medical diagnosis, built a company over a long period of time, made that investment, used his education, used his savings to really focus on a company that was an asset, and built that company over a long period of time and got his exit. That's what I see. You could pick that up too.
I would say most of our viewers and listeners probably would say, well, Steve was able to scale a company where he had an exit and created a very large amount of wealth.
Right.
That the driver of Steve's net worth is predominantly from the focus of building a business that had enterprise value that was sold.
Right.
Steve, would you agree with that?
Yeah, I would agree with that. And Alex, before you think all of my timing is great, remember that I timed the Bernie Madoff right during the 2008 financial crash. So that was, I guess that was perfectly timed in the bad way.
Yeah.
But, when I think of leverage, I mean, one thing I've done for 10 years is, borrow money cheaply to put into investments like LYNK. And that's provided enormous leverage and enormous benefits, for me. I have the capacity to borrow at low rates and invest at higher rates of return. So when I think of leverage, I think of doing things like that, and that has worked very well for me for decades. And so I'm going to have a new house here soon, which we'll own outright, but I will absolutely put a low interest mortgage on that and look to leverage that money into better returns.
One of the things we say is we didn't utilize leverage soon enough, at least for me, right?
Right.
And so at what point in time did you realize that was accretive to your life, and how early did you start utilizing leverage in that way?
Not to make it sound too much of a commercial, but I discovered that at LYNK. I had a little bit when I first started. I had a little bit of money at LYNK. It was generating a very healthy return, and I started having excess cash sitting around earning nothing, and well, this doesn't make any sense. So I increased my position at LYNK and wait, we all lived through very low interest rates for a decade, right? I can borrow money cheap and it's just,
So really recently, you didn't do it in your younger career as much.
Yeah, I didn't, when I think of leverage, Alex, I think of leveraging money. It's just kind of, how I'm hardwired.
Right.
So I'm, trading one return. I'm looking at the spread between returns.
Yeah, the arbitrage. Yeah.
Did I leverage? I'm good at math. I certainly leveraged that capability, right?
Yeah.
Throughout my whole career. I wasn't a good engineer. I didn't know how things worked, but I was sure good at numbers. And it's like, okay, well, I might as well apply them to dollars and cents and not electrons and volts. So worked out a little better for me.
Yeah, for sure.
Make sure I tell my son this story. He's a mechanical engineer, so he likes to measure things in volts and electrons and whatever all the terminology is. I don't profess to know. Well, Steve, this has been I kind of already knew your story because I interviewed you for the book, as I interviewed Alex as well as a case study for the book. So it was really great to hear the story again. I'm sure our viewers and listeners will appreciate it as well. Any final words on, people? I like to describe. I don't want to give everybody your age, but it's easier for somebody from your age to look back and say, here's how I got here, than it is for somebody who's 21 to say, well, how do I get there? How do I get where Steve is? And the point of this podcast and the point of the books and the courses are to try to give people more of a visualization and an understanding and a guidance of, here's what I did to get where I am. So any other words of wisdom for our audience?
I just assure anybody who's listening, I'll bet 10 to 1 odds they're more capable than they think they are.
That's good.
Great advice. Yeah.
You send anybody my way, and I'll show them that. It's just been my experience.
That's great.
All right, Alex, anything we missed from uncovering about Steve besides?
Oh man, I'm sure we could talk.
We should ask him how long. What's your fastest? Was it an Ironman?
Oh yeah.
And I assure your listeners want to know.
And remind us what an Ironman is. How many miles do you swim, bike, and run?
2.5 mile swim, 112-mile bike ride, and a full marathon, 26-mile run.
And you voluntarily do this?
They have a shorter version of that. They're doing in the Olympics, and they're doing it what's called an Olympic distance, which is basically 1/4 of that distance. But they're swimming in this Seine, I can never pronounce it, the Seine River, which is too polluted right now, so they've had to postpone the event.
Oh wow.
Well, well, so not only have you achieved great financial success, but your physical success to be able to do that. I don't want to tell everybody.
And LYNK's been a big part of that. And what I'm most proud of is all of my kids are LYNK investors now on a very small scale.
Nice.
And they're starting to ring me up and say, "Wow, they're asking all the right questions," and it's just. It's just, you guys have been wonderful, and you got our whole family all in.
Well, thanks. We feel the same about you. It's great to be with you today. Alex, any other final words?
Yeah, great story, Steve. Thanks so much for sharing with us. I think there's a lot of lessons that could be learned by folks, and it's really inspiring and appreciate it that you spent the time with us. Really appreciate it.
It's been my pleasure, fellas. Good talking with you.
Yeah, I agree. Well, take care. Have a wonderful day.
All right, cheers.
All right, see you.
See ya.